Good morning, MMTs. I have a daily chart on that S&P 500. Now, we had bought right up here. I'm going to make this very clear. We bought the other day when the market was going up to that reversal. We have 15 contracts here at $40 a contract. They're up $19,000 right now, right here. We know that they are going to go a lot further than what our limit order is for today. Our limit order to sell is exactly $64.50. And yes, there's only one contract traded. Our position is 15 here. And most importantly is you don't have to have a lot of volume. And what I'm going to show people for this time element. Now here's the time element. It is 7:19 a.m. Pacific Standard Time. It is 5:15, 2014. Now, because these are a July put contract, we're going to hang on to these, and we do have a limit order out there. And what we are going to do is we're going to get a call chart, and we're going to look at what this call market is. So if we hold the 1870, every time we've come down here lately, there is the 50-day and all the moving averages, and here's the 50-day, and now we're coming down again and we're testing it. And what we're measuring is the amount of selling within the first 50-minute opening bell, and how the contracts just don't move a lot. But we do know one thing for sure. It has been bouncing. But as I recall telling everybody, and I'm going to go over there and we're going to revisit this. And once again, for our big traders that we have, is we're going to do the following. And what we're going to do is what our prior analysis was. Before the fact, we must say, not after the fact, because these contracts that we have right now are going to go up. If they go up to $65, well, this current $18,000 will be at $37,500, and we have to have a plan to know why that is going to happen. Now, having said that, in other previous days, just this week, last week, the dead cat bounce, the short squeeze, the mechanical part of the HFT, high frequency trading, what? Superbot. So, one of the things that we do have going on the monthly is that it takes time. And it's not really an intraday process. We're going to find how to get calls, but I'm going to tell you right now. I said we're going to have a total of 10%. Not right now. I never said that right now. I said, though, a total of 10% throughout the summertime. Summer doesn't start until when? June 21st or 2nd. Therefore, when we get into that period, either these markets sell off going into that summer where we would have a summer rally. The spring rally has already taken place, and that spring rally on the S&P was to get that S&P all the way up there to what? 1900, and it did. And so we have the July put contracts right here. And if we get the price that we have out there, that is $64.50. We know that we're going to bounce, so what I'm going to do is I'm going to pull up some call contracts. I am going to cancel the sell, cancel all, and I'm going to take it up. I will sell 10 of the 15, and I'm going to take this up to $69. Now, there has to be a reason why that we're going to get $69.50. And that's not going to happen today. I didn't say that that was going to happen today. I am saying, though, that's where this contract is going to go. And we're going to put a limit order out there at 69.5. Now, of course, the S&P will bounce. Nothing goes straight down. And there'll be support levels The major support level that we're going to be talking about is going to be that, excuse me, it's going to be that support level and resistance levels that I talked about. Here we are later in the morning right now. The time is 7:52 a.m. Pacific Standard Time, date 5/15/2014. What I am showing intraday live is the calendar 2014, and this market in that S&P is extremely overbought. Now, the prior date was at 95.67 on an overbought level, and that these MACD bars is about as exuberant and as high as that we have seen these things ever. Therefore, by looking at the monthly chart with the volatility at hand, and it's live right now, that's what it looks like. And we're just going to show how overbought the S&P 500 is. Now, we did take a little bit of money off of the table and whatnot, and so this trade was up there at $20,000 total profits earlier in the video. However, the time frame that we have goes out until July 19th, which is a July monthly. Now, having said that, with the actual volatility, we would continue to hold 10 contracts no matter what. And the thing about that is that volatility, and we're right there at 55.9 to sell for. So live, right here, right now, I'm going to cancel that order live, and I'm going to work it. I want to see if anyone else comes up there. I don't see anyone else coming up there. 54.40 here, 59. There is no volume. I created that high print of the day at 54.9 on that exit. Now, what we are going to continue to do is we're going to continue to work this guy here because we made him go there. Now, I'm going to go 55.7 right here live in the market. Kabingo! Kabingo! Now, what have we done? We have contracted it. And 1001, 1002, 1003. Cancel all and see if the broader part of the market followed at 55.7, which they did. I canceled the order. Now what we're going to do is we are going to go out here and we're going to contract it to 100 pennies. And I'm going to hit sell, as you can see live right now, right here. And this is exactly what a market maker does. This way you can get in our market maker school and you too can do it. And we're just going to take off about 6,000 in profit, and we're still going to have 10 contracts because they're going to go considerably a lot higher overall. But one of the things that we do say, that's my print, 54.90. Now, I'm going to contract it at 55.40 and hit OK. Now, I'm 55.40, that's 54.40, 1001, 1002, 1003, cancel. Why? Because he didn't take it. So, that order is right there. Now he's back at 56.10, which is okay with us. The S&P has support. Now, I'm going to continue to work this trade. And you are going to continue to watch me, MMTs, live in this marketplace, here and now. We got 14 contracts left out of 15. They were up a total of 20 grand, and we're going to sell 4 contracts, which will give us a total count of 10, and we will hold those for quite a while. And then we'll go trade the call side off of that bottom. I just wanted people to see this monthly area. Now I'm going to do the following. So please bear with me. I am concluding that this market in that S&P 500, and excuse me, sometimes the headset doesn't work right, and so if I sound loud, please don't take it personal and whatnot. But this is that monthly level. And I'm telling everyone that I just told, like at the beginning of the year started, we are as overbought as you can get. and that the previous month was 95.52 on a closing monthly level. And right now, I am going to talk a little bit about that CCI. And what is that at? 97. Okay? And the MA 10. Now remember, the 100-month moving average, that isn't going to happen right away by any stretch of the imagination. What we will use, though, is the 10-month moving average at 17.99. Okay? And the 20-month moving average is clear down here, where over the next couple of months, the S&P can easily trade down here to, like I always said, 1687 on there. Hold on one moment. Here we go right now. I am on a daily S&P 500 index. And you got support at the 50 and the 40-day simple moving average on a daily level. However, on the monthly level, you're extremely overbought for the longer term on that S&P. And once again, that 50-day simple and that 40-day, every time that we got slightly below those key moving averages down over here, we bounced. And so what I am going to say from low to low, and in our platform, it's going to tell us exactly what to do. And when I take this consolidation down here and I spin that top, I'm going to spin that top, which is a perfect trend line, and we're right there testing those simple moving daily averages. And that's what it looks like as of 8:04 a.m. Pacific Standard Time. The date is 5/15/2014. So basically, having said that, what we are doing right now is we're working that bid and ask. And we have 14 contracts. I'm going to cancel it. Now watch what I'm going to do. For all of my MMTs in the market maker division, when you're going to make a market, I'm going to take, again, I'm only going to use one contract to manipulate the buyer over here to buy me, depending on which way that tick goes. When the tick goes up, I got a good chance of getting my price. And once again, I'm going to undercut this guy at 57.50, and right now here live in the market, I'm going to manipulate every exchange in the world. And you're going to see my order pop up there momentarily. There it is right now. Positive $18,130, and we're trying to get this side of the market to bite so that we can control the rest of the world with our print. And once again, we will see, so he went to 57.30. Now watch what we're going to do. We're going to go right back over here, and I created that high of 54.9. And I want my new MMTs to watch how I can control everybody in the pit on the CBOE. And how do I do it? Oh, I just do it with the price print right here. Now, 56.9, bingo, 56.9. There it is. It's only on one contract, but we're going to see how we, all right, so 56.9. I just executed one at 56.9. I was the first high print. Now I am the second high print. But what I needed to do was I needed to do that so that the rest of the players that are down there on the floor, when I do that print right there, that throws them all wacky. Now watch. Now watch. I'm going to try to create another high. And I'm going to do so by going right over here, right now. I use one contract only now. And what am I going to do now? I'm going to hit that market, and I'm going to create another emotional distraction at 58.5. All right, 58.3 is me. So what we're going to do now, we created those prints with 2 of the 15 contracts on this index. And it was very important to create that print. That's us, 54.9 right here. And that one there, you just see me do, is at 56.9 now. And then I left this guy out here to dry. He's there at 58.30. Let's make sure that everything is canceled. Now watch what we're going to do. We are going to control it again. And there is a big reason to do that because it's going to create a lot of emotion. And the kind of emotion, I'm going to go out here at 58.10. That's me at 58.10. I'm not going to change it. No, I'm not. This is live right now, 8:08 a.m. Pacific Standard Time, date 5/15, what? 2014. And, we're just going to stay right here. But I'm going to cancel it one more time and give him a shot. If he doesn't buy it, we could care less. So, if this guy here takes that thing off, so what we're going to do now, based on that tick, is we're going to go ahead and we're going to put out three. We're going to put out 3 quantity of the 15. And now what we're going to do, MMTs, I'm going to put this out there. I'm going to really throw them for a loop. And I'm going to put these out there, and the rest of them are going to see down there on that big board at 61.5 on 3, 61.5 on that sale, MMT. Yeah, it's done live. It's right before your face. Why? Because you deserve to do this too. And you can do this because when you get here, this is what is ahead of you. 61.5 on 3 of the 15. Now, I'm going to leave that there, and we will revisit this later. We still have 13 contracts, $18,000 profit right here. Actually, it's more than that. But listen, at 61.5, we put 3 more. And we're going to leave it there until I can see if there is going to be a dead cat bounce. One of the things that I am going to tell people is this. For my new MMTs, when you get down here below the 10 and the 20, and you're flirting with disaster at the 50-day moving average, what we're going to do is see if we can trigger a lot of stops in the S&P 500. So what I am basically going to do is I'm going to draw these 2 horizontal trend lines. Now, when the amount of fear gets in, when you sell below a daily moving average, that's quite significant. And one of the things that we're going to do is we are going to what? We are going to manipulate. We are going to manipulate, and we have 3 out at 61.50, and we would hold the rest. And I wouldn't see it today, but you just never know. So the remaining 10 is going to go out there at, the price is going to be, it's going to be, actually, it would be 68.7. That would be 10 quantity to sell so that it's out there at 68.70 right there. And that would be $68,000 right here. $68,000 that we would get back on our return. And we're going to keep those orders out there for now. But just remember one thing. Everything has a dead cat bounce. And in the next series, with my MMTs live in the market, we're going to go take a look and see what that 1850 call, the call side would look like. Once it gets there, we could buy that and still hold the put side. Once again, if I want to be a market maker, what do you got to do? You got to do the following. Here it is. Hey, come here now if you want to do this. It can be done. Even though these markets are rigged, they've manipulated these markets and high-frequency algorithms where things don't get their logical moves. Logic is logic. However, the exuberance that is done with these supercomputers, and we know that there is a big investigation going on right now, and that at some point, these people that do that to you, to me, and everyone, is they need to be fined and put in jail for manipulating the U.S. stock market. The biggest Ponzi scheme that's ever taken place in the United States history is happening right now.